Hi, there are Brexit import rules that most UK traders still misunderstand, and these import-export errors could trigger HMRC fines. We'll explain it.
In 2026, the way you do business here in the UK is set for its biggest shakeup in a generation. Seriously, we're talking about a complete rewrite of the rulebook for both your taxes and your trade. So the big question is, are you actually ready for what's coming? Hello and welcome. Now, before we jump in, I want to be crystal clear that everything we're about to cover comes straight from the expert tax advisors over at My Tax Accountant. They've put together this entire guide to help you get your head around it all so you can be sure the information is solid and, more importantly, genuinely useful. All right, let's kick things off with a question that really ought to be on every single UK business owner's radar. Did you know that your good old annual tax return is about to be replaced by 5 or maybe even more submissions every single year? Yep, you heard that right, because from 2026, that's the new reality. That one familiar tax return is being retired for good. So how are we going to break this all down? First, we'll look at the big picture, what we're calling the 2026 digital revolution. Then we'll get into the nitty-gritty of how your business accounting is about to change as Making Tax Digital takes over. From there, we'll head to the border to get to grips with the new playbook for imports. Then we'll cover the new compliance rules and the risks you need to know about. And finally, don't worry, we'll wrap it all up with a simple, straightforward action plan to get you prepared. First up, the 2026 digital revolution. So why all the fuss about this one particular year? Well, it's because 2026 is when several massive digital projects from HMRC all collide at once. It's creating what you could call a perfect storm of new rules for both how you manage your tax at home and how you trade with the world. Let's be really specific about what's going on. This is not just another little tweak to the system. The truly massive thing happening here is that 2026 is the moment where your internal tax reporting and the new digital border controls are forced to converge. This is it. This is the moment your company's books and your international trade become two sides of the very same digital coin. And believe me, there's no going back. Okay, so let's start by digging into what this all means for your day-to-day business life. We'll begin with the changes happening right inside your own operations, which all come under the banner of Making Tax Digital, or MTD, and it's going to completely, fundamentally change your accounting. So what on earth is Making Tax Digital for ITSA? Well, the simplest way to think about it is HMRC's big plan to get everyone's tax records online and updated almost in real time. If you're self-employed or you're a landlord, you're going to have to use compatible software to keep all your books and then ping quarterly updates straight to the taxman. The days of that shoebox full of receipts? Officially over. So who needs to be thinking about this? Well, listen up. From the 6th of April 2026, if your total gross income from either self-employment or property goes over £50,000 a year, you're in. Let's take a quick example. Imagine a freelance designer in London. She earns $40,000 from her work and gets another $15,000 in rent from a small flat. Her total income is £55,000, which puts her squarely in the MTD system from April 2026. Simple as that. Now, here's where most people get a bit confused, so let's make this really simple. Let's walk through the new process. 1, you've got to keep digital records using specific MTD-compatible software. 2, you'll send quarterly updates to HMRC. Think of them as mini summaries of your income and expenses. 3, at the end of the year, you submit an end-of-period statement to finalize your business income. And 4, you'll submit one final declaration, which pulls in all your other income sources to work out your final tax bill for the year. And this slide, it really shows you the sheer scale of the change. You're going from one single submission a year to, at a minimum, 6. That's 4 quarterly updates, one end-of-period statement, and one final declaration. And hey, if you have a property business on top of your main trade, that's another end-of-period statement. It's a huge shift in the administrative load, and it really demands a completely different mindset. Right, now that we've covered what's changing inside your business, let's shift our focus to the border. Because if you're importing or exporting goods, there's a whole new playbook you're going to have to learn. The post-Brexit trading rules are coming into full force, and understanding them is absolutely not optional. This new playbook is called the Border Target Operating Model, or BTOM for short. The easiest way to think of it is as a new, much smarter security system for anything coming into the UK. Instead of checking everything with the same intensity, it uses a risk-based approach. It decides which goods need a much closer look, especially things like food, animal, and plant products. So how does this risk thing work in the real world? Well, as you can see here, your goods will be sorted into one of three categories: low, medium, or high risk. Let's think about a small cafe owner in Manchester. The roasted coffee beans they bring in from Colombia? That's likely low risk, just needing the usual commercial documents. But if they also import fresh Italian meats, that's a medium risk product of animal origin. For that, they'll need a health certificate, and it could get flagged for a physical check. It is absolutely crucial you know exactly where your products sit on this scale. Okay, so what else is new at the border? A few big things. First, the old customs system, Chief, is gone completely. Everyone has to use the Customs Declaration Service now. Second, safety and security declarations are mandatory for all imports, and that now includes from the EU. Third, any physical inspections will happen at specific border control posts. And lastly, here's a big one you need to hear. The government's grand plan for a single trade window has been shelved. Stay with me because this really matters. It means that for the time being, you'll still be juggling multiple government systems for your declarations, which means more admin and more room for error. With all these new challenges, here is a golden tip straight from the experts at My Tax Accountant. Use Postponed VAT Accounting, or PVA. Honestly, this is a total game changer for your cash flow. Instead of having to find the money to pay import VAT the second your goods arrive, PVA lets you account for it on your normal VAT return. That means you can declare it and recover it in one go, which is a massive, massive win for any business that imports. And that brings us to our next critical section: compliance. You see, with new digital systems come new rules and, you guessed it, new risks. You'll definitely want to hear this part. This catches a lot of people out. We're going to look at the new financial penalties for getting things wrong. HMRC is getting rid of automatic fines for late submissions. Instead, they're moving to a penalty points system. Yep, just like on your driving license. Miss a deadline, you get a point. Collect enough points, and you get a fine. And as you can see from the table, for those new quarterly MTD submissions we talked about, it only takes 4 points to trigger that penalty. And what's the damage? It's a £200 fine. But here's the kicker. You get fined the moment you hit that points threshold, and then you'll get another £200 fine for every single late submission you make after that while you're still at the limit. Those points only disappear after a long stretch of perfect compliance. So you can see how this could add up very, very quickly. But the new compliance rules don't just stop at late filing penalties. There's also a new green tax coming over the horizon called the Carbon Border Adjustment Mechanism, or CBAM. Put simply, this is a new tax on the carbon emissions that were created when certain imported goods were produced. We're talking things like steel, cement, and aluminum. It's designed to level the playing field and stop UK industries from being undercut by competitors in countries with weaker climate policies. And the timeline for this is absolutely critical. The EU's version of CBAM starts its full regime on the 1st of January 2026. This is huge for any UK business that exports these types of goods to the EU. Now, the UK is bringing in its own version a year later on the 1st of January 2027. But what that really means is that throughout 2026, UK importers of these goods have to get ready for a whole new world of registration and reporting duties. Okay, phew. We have covered a huge amount of ground. MTD, the new border model, a whole new compliance regime. It can feel like a lot to take in, I know. So let's switch gears and focus on the solution. This final section is all about pulling everything together into a clear action plan, your key takeaways, and your immediate next steps. Here is your 2026 checklist. First things first, check your income levels right now to see if you'll be required to join MTD for ITSA in April 2026. Second, if you import, you have to identify the correct BTOM risk category for every single product you bring in. Third, and this is a big one, look at your software. Is it compatible with both MTD and the Customs Declaration Service? Fourth, make sure you and your entire team really understand the new penalty point system and all your new filing deadlines. And finally, if you trade in goods like steel or cement, you need to start preparing for CBAM reporting right now. Now, before we wrap up, it's very important that I say this. The information in this presentation is for general guidance only, and it really shouldn't be relied upon on its own for making financial decisions. You should always seek out professional advice. And for that expert guidance, we honestly can't recommend enough that you get in touch with the team at My Tax Accountant. They're the ones who put this whole guide together, and they really are the best people to help you navigate these complex new rules for your specific situation. You can give them a call on 020-8570-8531 or drop them an email at info@mytaxaccountant.co.uk. Thank you so much for joining me. We really hope this has given you the clarity and the confidence you need to prepare for all the changes coming in 2026. For more updates and essential guides just like this one, please do subscribe to the My Tax Accountant channel.